In this video, I'm going to show you how we are going to use a special moving average designed by AI to turn this strategy into this. It's going to be very interesting, so let's begin. Hi, my name is Tomas, in the trading industry known as the Mr. Breakout. I'm a professional breakout trading specialist, the author of the life-changing breakout trading book, and author of the universal breakout trading formula, highly prized by traders and professionals from around the world, which you can get at this link. First of all, a quick recapitulation. So in the previous video, we used a simple prompt and we asked AI Grok 3 to create ideas how to improve this strategy with AI proposed moving averages. Grok 3 suggested 3 different moving average filters. And while 2 of them were very basic and practically unusable, one of them really stood apart and showed some strong promise. So what was the idea suggested by Grok 3 we're going to improve and deploy today? Well, it's nothing fancy, but it is also something I never thought about and something that really could be a super powerful filter for everyone, especially if you trade indexes like E-mini NASDAQ or E-mini S&P. The filter that Grok suggested is basically moving average slope. So to help us visualize the entire idea and improve it and get it through the finish line, I coded a simple indicator visualizing this particular indicator. So we have exponential moving average calculated with the close prices and with the period 25. Then we have the slope, which is basically the difference of the moving average versus moving average 25 bars ahead, or ago, so it's basically the value 25 bars ago. And again, the positive slope is meant to be whenever the moving average is above the 25 look back period. If we put this indicator to the chart, we can see, let me show, we get a picture like this. So we can see it's nothing fancy at the first glance, but it is also something I would say pretty meaningful, because I do like the idea of using slope to filter out false breakouts. The only issue I have with the way how Grok suggested this moving average slope indicator is that I'm not sure if we should really trade it on the main time frame. From my experience, to filter out trades properly using moving averages, we should always consider a higher time frame, and that's where I believe we can get most out of this idea. So let's start by adding daily data. Okay, now we have added daily data here, and now let's modify the function slightly, or the indicator slightly. Let's use the calculation from data 2. So if we type data 2, now the calculation is from the daily data. By the way, the platform I'm using here is called TradeStation, and the language I'm using is called Easy Language. This is what we use in our hedge fund as well. All right, so this is what it looks like, and I like this picture much more. Let's now see how we should test this idea. So whenever I see idea like this, I do not follow it right away the way it was written. That means I do not believe that the suggestion made by Grok that we should basically only trade when the slope is above 0 is the best one. There are different ways as well, and in general, any idea can be tested in 3 different ways. So one day is above, second way is below, but third way is in between. And we really need to test all 3 of them to see if we will potentially get improvement somewhere. So what we're going to do, we're going to use these 3 scenarios. The scenario 1, we will only take signals if the slope is positive, and we will also test some higher values like 10 or 20. The second one, we will only test if the slope is negative, also with some values, but then we will also test the rest mode if the slope, if the market is somewhere between these slopes. So basically the first one is testing if we should filter out strongly trending signals because they're too far away already and there's no profit to be made, or if we should test signals in the correction below slope, which I think can be very interesting and can produce some great results, especially for breakouts, or if we should test when the market is in the rest mode, and that means between these two slopes, when it's not decided. That is, from my perspective, a very, very powerful potential entry as well. And a lot of great breakout entries do happen in the rest mode like this. By the way, the strategy we're using in this example was built with the missed breakouts formula. It's the same formula which I used to create almost 2,500 profitable breakout strategies, and you can get the formula on the link below completely for free. Now we have to make sure that this one is of data 2. So we're actually testing it with the daily time frame. Okay, now the code should be completely ready. And let's start with the first case when the slope is above 0. So this is the improvement. I don't think that's spectacular, although we definitely reduced the drawdown. It's still being reduced to a long flat period, and we definitely did not reduce this one. So let's try higher value. Let's do 5. And, well, not much of an improvement, especially here either. And let's do 10. And that's too high already. So I don't think this particular slope moving average idea for breakout trading is suitable if we have positive slope. So let's try now the negative one, because I suspect that trades taken in correction could be really the best trades to take. And I can see I was pretty much wrong. This looks even more untradeable. Let's try -5. Okay, no change here. So definitely not a great idea. So the first attempt was still the best. The second approach doesn't seem to work at all. Let's now try the third approach. And I have a lot of faith in the third approach, because I know that a lot of breakout trades work wonderfully in quiet markets, because we're just about before the explosion and we can catch some very big movement. So let's try this one. But before that, please don't forget to subscribe to this channel, because I'm going to give you way more interesting insights, tips, and ideas like this one, and because you can already find a lot of other indicators and strategies on this YouTube channel as well. So please subscribe, and let's now try the third version. So let's start with a simple version where the slope is between -5 and +5. So that's a pretty narrow range. I don't know what will happen. Probably a lot of trades will be filtered out, but it's a test to start with. And that's not spectacular either, but I suspect the range could be still too narrow. So let's try -10 and +10, which is bigger of a range. And it still is not great, although we can see there is some filtering tendency already. We got rid of the latest drawdown, and we still have pretty big drawdown here, but so it's still not usable. But definitely I do like the direction where this is heading. It is obvious that now we are actually filtering too many trades. So I think we should try a little bit lower time frame for the second time frame, and we should retest the first and third approach again. So let's cancel this one. Let's get back to the first approach, but let's also lower the second time frame a little bit. So this is still with the daily data. That was a pretty good outcome, but I think we need to go intuitively. I think we need to go to a little bit lower time frame. So instead of daily, let's maybe try, since the initial one is 60 minutes, let's try this one. Let's try 240 minutes. I think that would be great. Let's keep 11 years. And that's actually even worse, but since we're on a lower time frame and we introduce a little bit of a noise, we definitely need to try higher values. That's even worse. Okay, so we have to forget this one. So let's now do the last attempt. And now let's get back to this condition where we are taking the range. Actually, I have a mistake here. -5, higher than -5 and below +5. Okay, that's very promising. Wow, that's quite an improvement. But now we have just too few trades. So we're too narrow. We're way too narrow. Let's try 15. I think the range 15 could be the sweet spot. And wow, bingo. I think that's where we want to be. This is really good, actually. 59,000, the average trade is 57% profitability, average trade 255, and drawdown below 5,000. So the net profit drawdown ratio is almost 12-1. This is spectacular. Guys, this is absolutely fantastic. Wow, this is better improvement than I expected. Let's try also 20. And I don't think this one is so great anymore. We have 60K profit, we have a higher drawdown, so I would definitely stay with 15, or we can even try 10, 62 profit, and 3.5 drawdown. Why? Wow, guys, this is even better. So that, first of all, it's telling me that it's robust because we have neighbor values working pretty well, so we can deploy this without optimization, without overfitting, or with very low risk overfitting. I would definitely do not re-optimize these values or optimize. I would just keep them again to lower the risk overfitting. And overall, wow, I'm impressed. I did not expect this. Obviously, Grok 3 came up with a powerful idea. It did not work right away. However, with a little bit of work and insights and trading experience, we turn it into a very, very strong and powerful filter. So I'm curious if we could actually use this filter for other markets, if we could make it even more interesting. So subscribe, because next video I'll go even deeper and I'll test this filter on different markets as well, and let's see if it will hold on its premise. I think it's a very, very powerful and interesting filter. Also, do not forget to download the Mr. Breakouts formula guide for free on the link below, because in the future videos I'll keep working with this formula and using AI to improve the formula or improve the strategies with AI built with this Mr. Breakouts formula. If you like this video, give us a thumb up, and I'll see you in the next one, and we will continue with this very interesting moving average slope filter indicator. Happy trading!